Hey everyone, it's Daniel here from InfoWest. Hope you're all doing well. So I got an interesting article here. It comes out from Bloomberg. It basically says Toronto condo investors are losing money in a bad sign for renters. Most buyers who got mortgages in 2022 have negative cash flow, right? So is this a surprise really? Right? The fact that rates have been moving up so aggressively, the fact that people are feeling the pinch when it comes to inflation, unemployment rate has been, well, the unemployment rate is where it is right now. It hasn't really been moving up higher, but you've heard some job losses, especially with some of these firms, tech firms, and so on, that is affecting slightly the markets a bit, but not so much, not entirely just yet. But when we talk about the real estate market, right? When you talk about mortgages around the 5 to 6% level, right? How can anyone who owns a lot of properties be affording this, especially if you're, a new investor, especially if you're new to this, or, if you're, your tenants are no longer, either they're no longer paying, or your mortgage payments are much higher now than what you're charging the tenants, right? How can you do that, especially if you live in a market like Toronto where house prices are crazy sky high, right? You're talking about 1.5 to maybe even 2 million for just a normal decent house, right? It could be really expensive for a lot of these immigrants that are immigrating to Canada, because Canada's been heavy on immigrants, immigrating a lot of people into the country to spur up productivity, growth, and so on. How are these people ever going to afford homes? And if they are, and if they have bought homes, right, in 2022, or if they have their homes coming for renewal, or what have you, right? How can they ever afford in this sky high market these payments? You would think that they would be in a lot of pain, and especially with the hype, right? With the hype with condos, right? You see some condos, 700 square foot, around $800,000 for 700 square foot condo. Investors come and buy this. It's a great investment opportunity. Still today, you're hearing that from a lot of realtors. Get in now, pre-construction. And pre-construction was huge in Toronto also. Right? Back then, a couple years back, people were saying, buy this, buy these condos. They're going to boom. They're going to do well. Immigration, population is going to go up, and people are going to need a place to live, and these prices are going to skyrocket. And they were right. They were 100% right. Prices did go up. If you bought in 2016, you bought in 2015, you bought in 2017, bought in 2018, you bought in 2020 during the COVID crash. If you bought during that time, you made money. But now that has come to a complete halt. Right? Why? Because we've got inflation at crazy levels, because rates have gone up drastically, right? So now you have rates at very high levels, mortgage rates at high levels. Here, people feeling the pinch not only in their own primary residence, but also their investment properties. And the expectation is, here's the expectation, here's the kicker, right? That a lot of these people think and are hearing from other people in the market that rate cuts are expected to come in the next week, in the next month, this summer. Rate cuts are coming. Don't worry. You don't have to worry about your properties anymore. And that expectation, that hype that things are going to be fine, is what will keep you in the game, holding on to your property until you can't anymore. Right? So this article basically goes in, and I'll read it a little bit here for you, and you can check it out. I'll put it in the description for you to read up on it. But it basically says the majority of investors who took on mortgages in 2022 to pay for new Toronto condos have been losing money every month. A shift that could discourage future building in what is already one of North America's tightest rental market. That would be horrible if inventory even tightens further, because already there is a housing crisis. Already prices are sky high, and they're definitely overvalued. A lot of people disagree with me on that. I totally believe that the prices here in Toronto shouldn't be where it is right now. They are overvalued in my humble opinion. Same with other areas in the real estate market, but we can get into that later. When you scroll down in the article, it also says that about on average, such investors were basically now facing losses of around $223 Canadian per month, and with 11% losing $1,000 or more monthly. Now think about it, right? If your mortgage every month in your primary residence is 3, 4, 5K, and now you gotta pay on these investment properties, and you're losing about 1K there. And let's not forget about food prices and inflation and everything else out there. How are you really going to afford this? This is a setup for disaster. I remember during 2020 when there was one person, right? One person. You would go into some of these buildings where these builders would showcase pre-construction homes. And you would see, individuals going out and buying not one home, but 3 homes, 4 homes, buying multiple properties, right? Taking advantage of the whole money printing that's been going on and low rates. Taking advantage, over leveraging to make quick money. And they did, they were right? The properties went up. However, the problem is that many of these properties that are pre-construction are still sitting there and have not been constructed yet, right? So if you're sitting and you're waiting for the builder to finish, the house or what have you, and you're not paying on those payments anymore, and you can't afford it because rates are now up, then guess what? You're going to take a loss on those properties. Or even if your properties are all ready to go and ready to sell, well, if you try to sell it in today's market and your house is 3,000 square foot plus, it's very difficult to find a buyer when you're trying to buy at the peak 2022 levels. Very difficult, especially where mortgage rates are. So with this, for condo investors, they say in this article, 50% of these investors who got these mortgages in 2022 are in a loss, are feeling the pinch. And this is a story that time and time in history, right, tends to repeat itself, right? When you look at back in 2008, the crash then, it was, yes, they went crazy with giving loans to people who shouldn't have been qualified. But also people who were qualified ended up also getting hurt. And why, right? The people who had the income to buy 2 or 3 properties. Why did they get hurt? Because they over levered. The story is same whether it's real estate, whether it's the stock market, whether you're Carl Icahn, whether you're a hedge fund trader or investor. When you over lever and you get too deep in a position, whether you're buying or shorting or what have you, right? We saw the whole short squeeze with GameStop, with one of the hedge funds that had to cover its position, right? When you over lever and then something breaks in the economy or it doesn't go your way, it goes in the opposite way, it leads always to the path of destruction where people panic sell, they need to get out, they will sell at lower prices. And if prices are not selling in the neighborhood right now, but if they once one does and a couple does, now your comps, when you're valuating your house, starts to come down, and your property of your house starts to come down because you have people panic selling. So will that happen? Is it going to happen? You let me know. Leave a comment below. Let me know what you guys think about this. Subscribe, hit the like button as well, and I'll see you guys around. Thanks. Bye.